Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. Man, it feels good to say.
Yeah, it's been a while.
It's been a while. Andrew Hall here, probably didn't recognize me over this beard. Ben and I, equally bearded, probably more so bearded actually. But I think my Neard is winning.
It is. I have this bald patch right there. It's really itchy.
Yeah.
This morning it was really uncomfortable for me.
I'm pretty over it. It's the last day of November though, for those who have kept up with us all month, which we hadn't done a lot the last couple weeks. We are doing the fundraiser. If you go to twitter.com/TuskMediaLLC, we've got a pinned tweet right there that'll take you to our November fundraising pages. You can donate to Ben, you can donate to me, you can donate to the team.
You can't donate to Krebs though, because he hasn't made an account.
Hasn't made an account, and he shaved mid-month, which is just, I would say disappointing, but if your expectation is to be disappointed, can you really be disappointed? Yeah. That's age-old investing question right there. But we're here, we're back. Sorry for being gone for so long. We're actually moving into new offices. Next door, we're going to do a video tour of that place in maybe a couple of weeks. But so we've been kind of crazy. Along with that, intern Barrett's just been working his little heart out, trying to move things, hang things, put desks together, all that good stuff. So we're now settled. Ben has his own office now, so he's big time. He's moving on up in the world, and we're going to demonstrate some of that today. We're going to talk about Microsoft, kind of do a little bit of analysis, a little bit of overview, and give you some thoughts on some things that are interesting. Starting off with kind of this thematic transition at Microsoft.
Yeah, so Microsoft 4 years ago, 4 or 5 years ago, it was kind of Ballmer. Steve Ballmer was the leader of it. He'd been at the company for decades. We started off with Bill Gates. He was the guy who, he'd get up on the stage and get all sweaty and shout, developers. So he was in control of the company, and he just kept missing these trends. He really missed the cloud movement toward the cloud. He missed the movement toward an integrated platform. He missed the movement toward smartphones. And he even really missed the tablet movement. Then he came out with Surface, and it kind of was like an afterthought for them when it first came out. And then what happened at the beginning of 2014 is that he was replaced. Satya Nadella came in, took leadership of the company, and then he brought in Amy Hood as CFO. Had some good Wall Street expertise. She's a Harvard MBA, so she knows how to answer questions with, here's what I'm going to say. I'm going to give you 3 points, and then says the 1, 2, and 3, and then that's what I say.
She speaks in 5-paragraph essays, like you learned in 7th grade or whatever it was.
Exactly. It's pretty impressive. I would definitely like to speak like her. Nevertheless, so it was much more kind of, you had the Nadella, the innovative thinker, and then you had Amy Hood, who kind of tied it all together for Wall Street. So you had this new management shift that really changed the picture of the company for a lot of people. But what I wanted to talk about a little today was, are we actually seeing that change come in more than just words on a page? So what we have seen is that the word counts in the conference call have changed. So for instance, if we look at the word counts of the last quarter's conference call, the one ending in September, compared to the quarter that ended in December 2013, right before Nadella took over, the word innovate appeared 12 times versus 6 times before.
So twice as innovative.
Innovative.
Some would assert twice as innovative.
Over twice as cloudy, because cloud appeared 70 times in the conference call versus 29. 6 times more transformative, 12 versus 2. 17 times more intelligent. Wow. IQ just went from like 100 to 1700. 17 versus 1. And annuity, 9 versus 2. So that just kind of sums up where the points of emphasis are.
That's just a management consultant's dream right there.
This is straight out of MBA 101. The business segments pre-Nadella have changed from devices and consumer licensing, which you can kind of make.
Sounds pretty literal.
Yeah, computer and gaming hardware, again, makes sense. Phone hardware, yeah,
It's a phone.
devices and consumer other. Yeah, I don't know about that. Commercial licensing and commercial other. Now though, we have very intelligent definitions. We have productivity and businesses processes, intelligent cloud, and more personal computing. That's actually the title, more personal computing.
Now,
More.
does that mean there's more of it, or is it more personal than ever?
I don't know, that's a personal decision for you. Like, you have to decide. So that's kind of what the strategy is, and that's what they're trying to communicate to Wall Street. And what you've seen is that expectations for future revenue growth have increased. In 2019, they're expected to grow revenue 12%, which they haven't done for a few years.
Because they're more innovative, more intelligent, more
Exactly.
cloudy.
Exactly, and they're designed to be more services driven. Problem is, when you move to more services business, your initial thought is, well, I should have higher gross margin. But that's not taking place. The gross margin has actually declined, and there's been a widening gap between adjusted EPS and GAAP EPS. That's partly due to an accounting change, due to moving to more of a services business, but nevertheless, you are seeing that gap. So, definite, a definite difference in view of how the company is being viewed, but we're not really seeing the results quite yet.
Right.
And then I also wanted to get into a little bit of how the accounting has changed.
Yeah, absolutely.
Because as from an analyst perspective, things have been much more difficult to digest because things change so much at the company. For instance,
so we're going to have, this is great, because we're going to have a little cheat sheet for you, so you don't have to listen to how innovative. We're not innovative. We're just going to tell you what to do, what to look for.
So, for starters, the accounting department, so Microsoft, when it releases its numbers, it has an Excel sheet. So you can go into the Excel sheet, and it's all Excel Online, which, again, big push, Excel in the cloud. So you now have Excel Online, so you can go in there and then look at all of the trends, which goes back 5 quarters. So what I like to do is I like to say, put this five quarters in, and then go back another 4 quarters, and then put the next 5 quarters in, and kind of build out my model based on what the company is reporting to me. So that's what I like to do. Problem is, when you look to do like year-over-year revenue growth, you get the value, and you in Excel you get value. So I said, why is that happening? And the reason is, in almost all of the cells that Microsoft puts on in the sheet, they have a little space in it. So it doesn't read it as a number. So you have to go in, highlight that space, then highlight the entire document, do a replace all so that all those spaces disappear. And then it now treats it as a number.
Because otherwise it's just text.
Otherwise it's just text. So it really does not make it user friendly. Almost like, and Microsoft,
almost like they don't want you to know it.
Exactly. It's because it's not even a real space. You can't go into Control Find and then hit the space bar and then replace all with nothing.
You actually
have to highlight it and then
because it's an innovative space.
It's an innovative space, yeah. It's a blank. It's certainly blank. The second thing is that even once you do all that, you get I'm starting to move here. I got a few like quarter-on-quarter revenue growth, year-on-year. And then you go back another year or two, and the segments have totally changed. So then you kind of get to this point in time where it's like, why am I even bothering doing this? Because they keep changing. So let's say you dissect all the numbers, you clean them up, and you manage to translate it so it correlates over the quarters, and you have your nice data set. Well, now then you look at, let's say, the first quarter of 2016 compared to the first quarter of 2016 reported in second quarter, and the numbers have changed. They actually have, for example, in the first quarter of fiscal 16, they reclassified more personal computing, that biggest business segment, so that revenues rose $81 million.
That's what I'm talking about.
And where did they stick the revenue? They have this corporate and other, which generates negative revenue. So they have another revenue segment that's corporate and other, and that saw revenue fall from a negative 1.2 billion to negative 1.28 billion. So Microsoft is really making its financial statements difficult to analyze.
They're transparently difficult.
They're transparently difficult to analyze, and you know it's about as easy to use as its devices were back in the day. You know, full of bugs.
The Ballmer legacy lives on in
Exactly.
some regards.
Exactly. So, what's happened to Microsoft stock? Obviously, stock has really risen. From my perspective, I almost wonder is that kind of people are just getting lazy? You know, they're just bogged down in these massive data and these massive numbers, massive misdirection, and are they actually seeing the forest for the trees? Because revenue has not grown very much. EPS has not really grown that much. You look at a chart of Campbell's Soup EPS, and that has a better growth trajectory than Microsoft. So, you know, just pay attention to these factors when analyzing this company like Microsoft. Step back, take a 30,000-foot view, and say, you know, what's actually driving the results, and what are the actual results? I think that's a good strategy when you're looking at Microsoft, because I tell you what, I was lost for about 4 hours yesterday just in the numbers.
It takes some time. Dig in, really try to understand the story, not just the story you're being told.
Exactly.
The story that's actually within those spreadsheets. See if that makes sense. Long scan view, big transition. Do you have optimism that this service-based transition will ultimately be successful, but maybe it just hasn't come to fruition yet? Is that realistic in your mind?
I'm optimistic. I do think that this is something that had to happen.
Mm-hmm.
But they couldn't go on like they were. It seemed like that model was dying.
Mm-hmm.
There is more competition than I think they would like to let on. I mean, they're competing with Oracle, Salesforce, Google, Amazon Web Services,
right,
and of course Apple. So they're competing with all these guys, and that could pressure gross margin over the long term. It's going to be difficult to get from here to there. And the stock price has priced a lot of that in already, in my view.
Right.
So at the current point, we do own a lot of some Microsoft.
A lot of which is old legacy positions, so to speak, that
Exactly.
we've held for literally decades.
Exactly, which makes it tough to sell.
Yeah, very.
So we do have a position there. I would say that it's on the high end of fair value right now. I'd be a buyer of it, but I'd like it in the low 50s at the highest, and then preferably in the high 40s.
There we go. So everybody dig in, do your homework, leave us some comments if you're on Seeking Alpha. Tweet at us at Tusk Media LLC, and subscribe on YouTube. We're going to have a lot more videos coming back. We've been on kind of, I guess, about a 2-week hiatus. But we're going to be back in the grind all the way through holiday season. We kind of took a Thanksgiving break. We're going to have content coming through Christmas, through the new year, and going to start 2017 off with a bang. Thank you guys for being here, and we will talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.